A warm welcome to everybody. My name is Kiran Menon, research analyst at X-Trade Brokers, and this is a recorded message where I will be discussing with you the economic catalyst that are to be scheduled to be reported for today, tomorrow, and day after. Um, these catalysts are considered to be of immense importance is because I believe they would define a trend, at least for the short term, the bullish trend or the bearish trend, where we already had the UK economy reporting their GDP for the first quarter of 2012 that came out really depressing, a point two, a minus point two, a point two contraction against an expectation of point one expansion. But I believe traders, even though have I have actually sold off the pound to a certain amount of to a certain amount. This is what the effect has been on the GDP data. But I think traders would be absolutely turn away from it very quickly, even after the US durable goods data that is scheduled at 6 p.m. Indian Standard Time. The reason for the same is that the overall market is taking these data, the first two data, with a pinch of salt, is because of this, the FOMC interest rate decision. But I don't expect the Federal Bank, the US Federal Bank, to increase their interest rate from 0.25 to even 25 basis point. But what is important is the press conference or the speech and comments given by the Federal Chairman Ben Bernanke post the rate decision, which is scheduled at 11:45, the FOMC at 10 p.m. Indian Standard Time, and 11:45 p.m. the press conference. The reason for the same, the markets are actually being consolidating. This is the Euro USD, if you would see. This is the Euro USD chart. Even though it has been going up, it does not actually shoot to a very high. This is yeah, there will be a much better picture. A daily chart. We'll take a daily chart instead of an intraday chart. Yeah. If you would see these areas, these levels, we had certain amount of dips and buys, but that was not a trend. It's a more of a consolidation that has begun since I should say 10 since the 13th or the 17th onwards. People, there was a little bit of dip, but it bounced from these levels, but this was just consolidating. They are actually waiting for the comments from Ben Bernanke as to what he has decided. I mean, if this would be such a thing, if Ben Bernanke would comment or possibly even hint that he's going to expand his balance sheet by spending more money, by pumping in the stimulus or printing more money in the economy, we would possibly see a massive rally in euro. Not just in euro, possibly in pound, in commodities such as oil, such as gold. This would be a absolute trendsetter, a bullish trendsetter if that should happen. But also in the fact that they should also pave towards the fact that US economy is still not recovered. If that thing happens, if Bernanke actually decides to expand his balance sheet by pumping more money into the economy, it would actually or eventually result that US economy is still not recovered, and the 8.3 downsize that or 8% downsize in the unemployment rate that we have seen in the past few months of since December was something still not a phase of recovery the US economy has seen. If we would this and that's why this is important for today, which would become a trendsetter, which is why it is followed by tomorrow with the weekly jobless claims. Why is this important? Unemployment or employment situation in US has always been the question mark since the recessionary crisis, where the spending patterns, where this economy, the economy of US, is actually thrives on the spending pattern, and if you don't have a job, you won't be able to spend, and that would actually push the US economy, into deflationary stage. Now, deflationary stage is something where the prices are going higher, but there is no demand, and that's where there's no demand for goods, and the and people cannot tame the inflation levels because they don't have the job to actually purchase. They don't have money to purchase. I'm sorry, they don't have jobs or which where they can earn money to purchase things. That would actually push the economy, the US economy, down to a recessionary phase. And that's why weekly jobless claims is all important for tomorrow, where it would possibly take a cue from the FOMC press conference. That is, if Bernanke says that the employment levels are at the comfortable level and they won't be needing any quantitative easing, then possibly we would see a falter in euro, in commodities, and possibly all the high yielding or riskier currencies, euro, pound, Canadian dollar, Australian dollar, which would then be followed by weekly jobless claims if this comes in much better. If jobless claims comes in 376 as compared to 386, that would just that was only put even further more pressure towards the euro, and would only affirm the fact that Bernanke is right about there not being required. There is no requirement of any further expansion policy. So I would rather wait for the press conference with the comments. If I need to trade on the currency pairs. Possibly, if I don't want to go against the trend, I'd like to go with the trend, so that I would be more in a safer bet. Would be more safer bet if I go with the trend. So possibly wait for the FOMC meet, and which would be a trendsetter from in the Asian markets and of course the European markets. And then there will be the weekly jobless claims, which would actually affirm or possibly deny as to what FOMC is trying to state, or Ben Bernanke has stated. But after this, people would actually price in those factors very quickly for the Friday, why GDP annualized, or possibly the first GDP figures being reported by US. This is a preliminary figure. This pre is known as preliminary, which means the first time where the US is going to report its first quarter GDP as. The forecast is a slight contraction of 2.5% from its previous 3%. But let me actually show you why is this important, and why is this important, why it should be seen. This is a GDP comparison between US and UK. If you would see, since 1979, the contraction has been quite similar. I mean, the correlation between them has been quite similar. Each and every bout, the UK has been the first to report its GDP figures, but even though especially during these phases of 2009, 2010, US has been over and above the UK GDP. Well, but the correlation seems very strong, especially these levels since 2006. So there comes the question, if UK GDP would be a benchmark for, if UK GDP would be a benchmark for US GDP, I would say no, this is just a correlation that I found out It's because both economies are running into a recessionary phase, and possibly the Western economies are running into a recessionary phase and are unable to prop up its its trough levels. But what is important in GDP is that should this be a trendsetter as compared to this, the FOMC press conference and the weekly jobless claims? I would say no. The reason is because these are actually based on weekly jobless claims and the FOMC press conference. The US, as I said, the US economy or US GDP is based on how people are spending. And if people are not spending because they don't have jobs, then that would be done by Bernanke, where he will be actually pumping money in the economy. So basically what I would suggest is that this both things, these two datas for today and tomorrow might be a trendsetter not for the Friday's GDP but for coming GDPs, 3 months down the line, which was I believe which is then scheduled in July or August. It's been scheduled, and therefore this should be taken with I should say with a pinch of salt, even though it would be a very important data for a short-term time frame, but this won't be a reason for a follow-through of trend for the next week, that is from Monday 30th onwards, or the May month onwards. This would be a trendsetter. What Ben Bernanke has decided, possibly to expand his balance sheet or possibly to lay low and not to choose any more spending patterns to prop up its economy. And therefore we would see, and then we would see a possible breakout from its upper side or lower side, from its consolidation that has been there for quite some days now. So I would suggest all the traders to wait and watch as to how the markets are reacting with such datas that are lined up. And I would see you next time and discuss about how it turned out to be and how our markets behaved with these catalysts as such. This is once again Kiran Menon, research analyst of XTB, signing out. Thank you.